Good morning, traders. Today is Monday, August 23rd. My name is Charles, and this is the Pirate Traders live stream. All right, well, I wanted to take a quick second this morning to talk about something that jumped out at me right away when I looked at this regular candlestick chart this morning on the daily. So oftentimes we talk about on the channel something that's called a when what should happen doesn't. Okay, so when you're a trader, really what you're trying to do is you're trying to develop a skill set for pattern recognition. And you get good at it. You get good at realizing, okay, I've seen this movie before and I know how it ends. If the market does this, it's likely to do that, and so on and so forth. But sometimes what happens is you'll see a pattern, you'll see something that should happen a certain way, and you take a trade and it's profitable. Other times it does the exact opposite, okay? And when that happens, it's what we call a when what should happen doesn't. And that is often a signal that is just as potent as if the market had done what it was supposed to do. It's just a signal that tells you something else, right? And so you've got to look for what is the information in the fact that it didn't do what I think it should do. So what jumped out at me the moment I opened my chart this morning was this 50 moving average on the daily candles, which is the white moving average that you see right here. So almost always when the 20 moving average breaks, we have to push down and test that 50. You can just look right here. It happens over and over again, right? That 20 breaks, we immediately head down and test that 50. Why? Why is that what happens? Well, the longer term, stronger hands traders love to buy that 50. So as soon as they see that 20 break, they're going to pull all their liquidity out of the market and start layering in orders right down there around that 50 moving average. Okay, that's the way that they would enter that trade. And then, of course, so if it's only short-term weak hands traders who are participating in between that 20 and that 50, and they are weaker hands, and that 20 breaking, for the market to break that 20, it often has to really have like a vicious down day. What are weaker hands traders going to be feeling in a time like that? Well, panic. They're going to be feeling, a lot of panic and fear, which pushes the market lower. So it's just very, very common when that 20 breaks, you got to come down to that 50, and then the orders are layered in right down there, and so they buy it back up, right? The stronger hands players step in and give the market the strength for the weaker hands players to push it higher. Well, interestingly enough, last week we didn't actually do that. We broke the 20 moving average, but then we came down and we missed that 50. We didn't quite make it there. We also had this trend line, which is this white line that you see, the straight line going up here, that was right there at the exact same spot. So that means there would have been a lot of longer term traders layering in orders right around there. Okay. And guess what happened? The market traded down and it didn't get to that 50. So that's a when what should happen didn't. Okay, well, why didn't we get to that 50? Well, obviously, those longer term traders, they don't put everything, they're not going to put all their orders right there. They're going to layer in, they'll have some there, some there, some there, right? Like that. That's how they're going to buy in. So obviously, when the very first of those stronger hands traders stepped into the market, that gave the short-term weaker hands traders the momentum to push higher, which to me is a signal that the short-term momentum traders are still in charge of this market. They've been in charge of this market for a year and a half, and they are still in charge right now. Okay? That also tells me that there are probably a lot of orders that were sitting down here from larger players that never got filled because we didn't get to that 50. We didn't get to that trend line. So there's probably a lot of orders sitting in there that never got filled. Well, these people aren't going to just sit on cash forever. They're looking for the new entry to step into the market. In my mind, a great opportunity for that would be if today's market trades back down to that 20 and it finds support there, we know they moved these orders up to there, and that's where they're looking to get in. And that could give us the juice to continue higher. Okay? So just one thing to think about, a when what should happens doesn't scenario. Okay, let's hop over. Oh, geez, the market's going to open in 2 minutes. Real quick, the overnight inventory is 100% net long, so we're looking for a counter auction to that, meaning the market to pull back down a little bit at the open here. Obviously, we also have a gap Okay, so we're going to have gap rules are in play. Gap rules tell us if the market trades down to yesterday's high at 40. Oh, geez, was it right at 44.40? Oh, boy. So if it trades down to yesterday's high and it finds support there and starts to push higher, that is bullish as a gap and go scenario. Okay. Also, if it tries to trade down and it can't get down to yesterday's high, that is even more bullish for a gap and go scenario. Okay. We also have spike rules in play because we had a small spike in the M period on Friday. And spike rules basically tell us if we open above the spike, that is the most bullish scenario. Okay. So that's very bullish. Any way you look at it. The fact that the overnight pushed higher and then did its rotating up here is just very, very bullish for us to continue higher. The first thing to watch is that attempt to fill the gap. We also did a pretty good job of pulling value higher at the end of the day there on Friday. Okay, so the value, it is technically overlapping to lower from the previous days, but you can kind of see these three as sort of balance, right? This is a generally fair area for the market to do business, in particular, right in there. Whoops. Just giving my data a minute to load here. Okay, so these green arrows that you see, that is the gap that we'll attempt to fill. But as I was saying, lots and lots of support right here, right here, right here, right? All kind of perfectly lining up around yesterday's high. So if the market trades down there, it should be good support for a gap and go. So far, no counter auction, which is bullish. You've almost got, it's not technically a 45-degree angle because to be a 45-degree angle, it would have to be from the low. But you've almost got like a 45-degree angle in here, which is a sign of strength, of potential support. So as the market trades down into that area of the overnight, they might find support. It's very risky to try to go long here, even though you have so many bullish signals with the gap and go. There should have been somewhat of a counter auction. So I have a feeling this is some FOMO buying here first thing in the morning. Let's go take a look at the low. Yeah, not great taper at the low either. So the idea of asking yourself whether you should go long up here at these prices is essentially a probability play, right? Even if the market is bullish, it shouldn't just go straight up nonstop forever. It should pull back down, find some support perhaps in this node right here. Give the stronger hands buyers a chance to step in. Anybody that's buying first thing out the gate like this is probably shorter term traders. Good morning, RK Leon. Good to see you. Malcolm, good morning to you. Jang, if I'm saying that wrong, I apologize. Good morning to you. Trading Donkey is here. Good to see you, brother. Espacio, good morning to you. Gap rules, baby. Tom is back. Good morning to you. Shubaho Deep, good to see you. Welcome. 777, morning from Lithuania. You are the Lithuanian. I actually that place actually does randomly pop up as a pretty heavy visitor, so appreciate you. Jamie, thank you. Yes, I am in New York. Still looking for an apartment, but I'm here. Rad, good morning to you. Ronald, good to see you. Marco, good morning. Jose, good morning to you. Phoenix, what up? Arthur is here. Good morning. Mizu is back. Hi. Arthur, ES is going up like a rocket this morning. Oh, yeah. FOMO is jet fuel, baby. They can just push it. Obviously, it's way too early to make any kind of guess here, but I wouldn't be surprised if we got a rotational day that kind of rotated around here. Just because we spent very little time rotating in here on the way up, we kind of broke out of a balance over here. So we spent these couple of days rotating around here, broke out and immediately went higher. So we did a little bit of rotation here on the way down, but it would make sense to do at least a day of rotating in here on the way back up. But let's see. They may get us up to all-time highs today. Okay, well, so far this is bullish. Gap and go. Next major resistance is the base of the spike up here at 44.70.75. Yeah, Donkey. Donkey says the price action doesn't make sense. What with the Fed's big meeting at the Jackson Hole coming up? You'd expect them to be a little more cautious, but the question is, who is the them? Is this the bigger, smarter players that are FOMOing in this morning? Or is it the shorter term, weaker hands? They run out, and then the market starts to rotate. No, the gap doesn't have anything to do with the taper. It's the volume at the low. You just want to see the volume. Essentially, let me zoom right in there. So what you want to see is the volume kind of like slowly coming down. So you have 500 contracts here, and then 600, 600, and then 45. That means that the market just didn't really have any good trade take place here. They filled what they needed to and then immediately went higher. So what you'd want to see ideally is like maybe you'd want to see like 2,000, 1,500, 1,600, 100, something like that. You just want to see it slowly coming down. The fact that these three are almost exactly the same and then this one's much lower is just a sign the market didn't really get to have its two-way auction there. Taper is a very minimal thing. You can leave bad taper behind, but it's something to note, to just have in the back of your mind just in case. Obviously, the most potent signal that we're looking at today is the gap and go. If they can keep the market from trading back down to yesterday's high today, that's just bullet. That's the most bullish of the signals. Good morning to you, TV. Yeah, Chris, there's some optimism out there in the markets. Let's take a look at the internals, see where they're at this morning. Okay, opening bullish, remaining bullish on the breadth and on the advancers versus decliners. The tick opening very bullish above the 1,000 mark, but then pulling its way back down. It remains bullish as long as it's above that zero line. Yeah, I think they're going too far too fast. It's going to lead to some rotation. If you guys wouldn't mind smashing that thumbs up button, I'd really appreciate it. Still trying to let that YouTube algorithm know. They should send people my way. Okay, so this is a better example of taper at the high here. I don't really love it. I hate when it has less than 100 contracts at the very high. But you see how it's like 1,700, 900, 320. It's tapering off. That's more what you want to see. Okay, so first potential support on the way down is going to be this node of volume we created first thing in the morning here, just below the halfback at about 44.59.50. And then if not, down here, this node of volume from the overnight where the POC was. Once again, there's kind of like almost a 45-degree angle. It's not technically a 45, but that's just a sign that the buyers kept buying it higher and higher and higher and higher. So there should be a lot of strength in this area. RK, you're supposed to be watching the markets. What do you do Googling Lithuania? All right, well, while the market's looking for some support, let's take a look at the NQ and see what it's doing today. Okay, also a gap and go. Pretty much moving with the ES. It's a little bit more bullish. One indication, like, so what's happening so far today is they're literally buying every single dip very, very quickly. Again, that's just a sign of short-term momentum traders jumping in as soon as they can, every little pullback. And they can keep pushing the market very, very far, but they're not stronger hands players. So something to keep an eye on is the advancers versus decliners. And we'll see, can it stay kind of pegged up here at higher prices? Can it kind of just bounce around in this area? That would be bullish. But if it continues to sell off like this to the downside, it is a sign that those buyers will run out. Okay, so both the ticks and the advancers versus decliners are showing us that this is running out of steam here and that they need a bigger pullback to bring in the buyers. I am bullish, but I do think we need to pull back, bring in some stronger hands here. The ticks holding the zero line would be bullish. It would show that they're stepping in this node of volume here. But if it continues to trend lower and it starts to push below that zero line, then you get a little more bearish, assuming that pullback will have to be deeper. Jitting 4,500 or 4,400 first. I guess that's as far as it'll let me zoom out. Yeah, no reason in the world why we would have to revisit 4,400. Made a good low there. I know some people think it's weak because it was right at that number, but I don't see it that way. Lots and lots of support in the second half of Friday in that P shape. So I don't think we have to go back to 4,400. I think we good at these higher prices, but I do think we need some rotation. Got to spend some time here before we move higher. Let's wait and see. All right, so now they bought into that dip. Let's go look at the internals and see where they're at. Yep, bounced off that zero line. So those short-term momentum traders are still in control. Next resistance is the base of that spike at 44.70.75. Okay, we got a poor high. Normally we get a push away from the poor high. If it were to immediately go back up and repair, that would be more bullish. If not, expect it to pull back down into this support to be able to break through. Okay, so that was a very quick push away, which is bullish. So far we've got a gap and go. A gap and go in particular that should have had a counter auction and got almost no counter auction at all, so that's bullish. value is higher. That is bullish. We are one time framing higher. That is bullish. And we have bullish internals, which is bullish. Okay, so we should get some resistance up in here. And getting none whatsoever is a sign that they are looking at that all-time high. That's their target. Thin volume in need of backfilling. Pavel, good morning to you. Welcome. $70 people watching, 37 likes. Please smash that thumbs up if you can. If you will. It's absolutely free. Costs nothing for you, but is super helpful for me. Okay, 138 contracts, definitely in need of backfilling here. Thank you guys for those likes. Appreciate ya. Okay, ticks still trending down. Starting to push through that zero line. So again, if they can find support here like they did before and push right back up, that would be bullish. If not, it's a sign that we are running out of buyers. The advancers versus decliners also still trending down. Good morning, Fausto. I definitely agree. The trend is up. Don't fight that. Wait for the pullback and go long. Okay, good taper on the high. Ticks trending down, getting below that zero line. Market could be looking for a pullback here. Mediterra probably will get close to 4,500 at least. It's possible. I am just of the belief that this is the short-term momentum traders. So what happens when they get above that all-time high? To break out above that all-time high, they need to bring in even more short-term traders. I don't know if they have it. So my guess is if they get up there, they just get a little bit of excess and then right back down. Tom, do you mean what does prob means? He means probably, which I assume just means he thinks that that's more likely to happen than the alternative. Yeah, fair enough. All right, man, they're stepping in again. They really want to get to that all-time high. First thing this morning. I'm getting rid of this as a potential support to think about for entering a trade down here at 44.60 just because of time, right? The more time that we spend up here, the higher probability that we're getting acceptance of these higher prices. So there should be orders set to find support right around this node of volume where we did all the churning this morning. You got the half back there as well. So if that can't hold for support, we would likely need a further pullback. We got good taper on the high here at the moment. 6,000, 3,000, 1,900, 1,600, 1,200. Don't love the 24, but that's okay. Psy worker, welcome. Tapering is basically a sign of the auction coming to an end. Okay, ironic that now it's pushing higher, but like just think about it like you're running out of sellers. If there's less and less and less volume moving up this way, buyers, you're just running out of buyers. Whereas if, let's say, the volume, looks like this, and then it's like this, it's like it's not going down, it's random. That's sellers piling on to try to short it. So good taper is a sign that you've run out of buyers. But in this case, we have not yet. Tick starting to trend higher here. So this is bringing in new buyers. They're getting excited. Advancers versus decliners kind of staying pegged up here at these higher prices. The real question will be what happens when we get above that all-time high. Get some taper above there, get a little short squeeze, then what happens? My guess is, boom, falls right back down to this 44.63 level. Short-term traders got to take profits. Oh yeah, it'll bounce right on that zero line quite often on the ticks for both indices. You could see, okay, maybe it went a little tiny bit lower, but yeah, it just bounces right off of there. So essentially when we see that with the ticks, when we see it's like it's pushing down to the zero line and then it's instantly bouncing up, it tells us that it's not people trying to short this market. It's just the buyers are running out. That's what's getting us down to that zero line. But then new buyers are stepping in, which means they're buying every little dip the whole way up, which is bullish. As Jim Dalton would say, traders will do what works until it doesn't. Earlier this morning, they pushed higher, grinded up to here, came back down. They bought that first dip. It worked. Then they pushed up higher, came back down, bought the next dip. It worked. Now they're doing it again. Traders will do what works until it doesn't. Design knob, do you mean your trading was terrible last Monday and today worse? Are you trying to short this? Is that the problem? Yeah, I always tell people don't try to fight the trend. If the trend is up, you either sit on your hands, don't take any trades, and wait for a pullback to go long with the trend, or you just go long with it. You don't try to short against the trend because they can just keep pushing it. They will shock you how far they can push it when they've got a good, strong trend going like this morning. That gap and go should have had a counter auction. We should have pulled back a little bit. So that's the first indication that this is strong, this momentum. All will be revealed once we get above that all-time high. There's nothing wrong with that realization, Design Knob. as the old saying goes, better late than never. You don't want to keep dumping money into the market for months and months and months more. It's just not for everybody. But the good news is there's still lots of ways to make money. You know what I mean? You can invest in stocks long term, which is a much safer and more reliable way. You can get into, the real estate market, again, long term or short term. You can buy properties to own for many years or to manage a rental property. You can start a business. You could be an angel investor and find other people starting businesses and invest in theirs. You just got to figure out which one fits for you. Mediterra, another idea. Get into porn or whatever. Sure, there's that too. There's a great book. So if anybody here has ever read the book Think and Grow Rich, I highly recommend it. It was written in like the early 1900s, but it's really a perfect description of how to frame your mind for getting wealthy. And somebody else wrote another book called Wink and Get Rich. And what it is it's like an allegory of a little kid who's like trying to figure out how to become wealthy one day, because his dad is like a regular middle class, blue collar type of character. And so he wants to figure out how to become wealthy. And the story is like him walking around his town and talking to all the wealthy people about how they make their money. And you see that you got to figure out what's right for you. If you're a plumber, you can make a ton of money as a plumber. You just have to do it right. You put in the work, you become the most knowledgeable plumber. You treat your customers really well, and you build up a large collection of customers. And then you go out and you start your own plumbing business, and you train all of your employees to be as good of a plumber as you are. And then your business grows. And then you have 2 plumbing locations, and then 3, and then 4, and all of a sudden you're in multiple cities. And before you know it, even though all you are is a plumber, you're extremely wealthy. Making money is just all about finding out what's right for you. Design Knob, if you don't mind me asking, what do you do? Like, what area is your work in? Oh, bro. Yeah, man. There's so much opportunity for you in that. Are you kidding me, man? You could easily start your own firm. You just start working on your own portfolio, find a client, just one client, the time you've been committing to trading over the last however long you've been doing it. Start committing that to finding one single client. Build yourself a website, start a social media account. It's not going to happen overnight, but 5 years from now, you won't have to work at a full-time job for another company. You can be running your own company doing design. I mean, that's really great position to be in moving forward. That's one thing the AI can't steal. That's the one thing they can't make a Tesla bot to do for you. Well, there you go. Then just long-term investing. You know what I mean? Buy the S&P, buy the Nasdaq, and just hold it for the next 10, 15 years. The most important thing, Design Knob, is just don't think about it, even though I know it seems like it because you've put so much time and effort and money into trying to make it as a trader. Don't think about it as a overall negative thing. You know, that's what life is. You try new things. Sometimes it works, sometimes it doesn't. And who knows, maybe after you take 6 months off, you suddenly think to yourself, I want to give it another try. But the next time you just do paper trading until you're profitable and you don't actually lose any capital. Yeah. Well, there's, again, nothing to be ashamed of. Almost everyone who sets out to day trade loses money. There's no exact figures, but Jim Dalton talked about how he was running, or he owned a low-cost futures exchange for a little while, and it was like almost everyone, like 95% of the people would fail. Most of them within the first 3 months, and those that lasted longer than 3 months within the first year. Like 95% of them would blow up an account and just quit. So there's nothing to be ashamed of that. It's an extremely challenging game. I don't agree with you on that one, Design Knob. I don't think being over leveraged is a good thing. And I think what you might be talking about is you're undercapitalized. You don't need to be overcapitalized. You just need adequate capital. Is the C period going to reverse? Yeah, I definitely. I don't know if it's going to happen in the C period, but we definitely need a pullback. No, I mean, it's Jason. In my experience, what's the most common thing is people jump from thing to thing to thing. I mean, that's what I did for years. Like some guru online shows you that he made $5,000 in a day trading low cap stocks or whatever. So you buy all the books on low cap stock trading and you watch all the YouTube videos and you open the account and you do it for a few months and then you lose money and you think, ugh, this isn't real. You can't make money with low cap stocks. And so then you try something else and something else and something else. And then that is what I think is the biggest problem, is that I really think you can make money any way there is in trading. You can make money trading any indice, any style, using any tool. You just have to become an expert at it. And the only way to do that is to put in the effort, take the pain, and learn. You don't learn to play the guitar magically all at once. And you certainly don't learn to play the guitar by trying every instrument under the sun. You learn by spending years and years and years, getting blisters on your fingers, putting in the time and effort, and playing every day. I just think that's what it is. I also think trading, one thing I'm learning from coaching is that a lot of people just fundamentally don't have what it takes to be a trader. To be a trader, your brain has to be able to carry multiple different thoughts at the same time that are completely contradictory to each other. And even while that's happening, you have to be able to learn from it. And that's just a very complex way for a brain to process information. And I just don't think a lot of people have it. I get emails from people over and over again where they'll write to me and they'll say, oh, Charles, I don't know what to do. I got into this trade. I did this and this and this. And then I'll write them and I'll say, okay, well, here's where you went wrong. You shouldn't have done this. You should have done this, blah, 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 blah. And then 2 weeks later, I get another email from them saying the exact same thing again. And it's like, if you're not capable of learning from your mistakes in real time, you're just going to keep getting crushed. And the more you get crushed, the harder it will be to trust your instincts and learn and grow. We were talking about that Market Wizards book, the Unknown Market Wizards. One thing they mentioned in there is like, most of those guys in that book, they've all had huge blowups and a big error that they made, but it only happened to them once. And then they learned from it, they developed their strategy, they changed their system to never make that mistake again. And I think the biggest problem I've noticed with coaching is people do the same things over and over again. And then the more they do it, the less they trust that what I'm saying will work. So it's just one of those things. I don't think it's for everybody. But I do think if you want it to be for you, the way to do it is consistency. Pick a trading style, pick an indice, and just keep working at it. And there's nothing wrong with paper trading. You don't have to use real money. Paper trade until you take your paper account to $1 million, then start trading. Whatever, who cares? It's a process of learning. You wouldn't want to learn the guitar in front of a stage of thousands of people. You'd want to learn at home in your apartment by yourself. And then when you get really good, do it in the big game. Right? Do it in front of other people. You don't have to risk your real money in the real market to learn. All right, guys. Well, with that, sorry to end on such a negative note, but with that, I'm going to switch on over to the private stream with the Brigade. If anybody's interested in joining, there is a link in the description. It's $10 a month, and you're all welcome to join. If not, I look forward to seeing you here tomorrow morning. If you're a member of the Brigade, give me about 5 minutes, and then I should have that link up and running.